Nigeria has Vision 2020, as we spoke of earlier. Kenya has Vision 2030. South Africa doesn't quite have a vision, and yet we've got a lot of priorities for education, for healthcare, for job creation, for dealing with the budget deficit. Do we need something concrete?
I think we need an overall formula for success. We know that our National Planning Commission is going to be developing some sort of vision by 2025, I think it is. But in the meantime, our former Finance Minister, Trevor Manuel, who is of course the head of that Planning Commission, was part of a Commission on Growth and Development, which began its work in 2006, reported in 2008, and it identified what are the factors that make for rapid growth, for GDP growth in excess of 7% a year for 25 years or longer. 30 nations had achieved this, and they followed a formula for success with 5 factors. And those factors are, first of all, fully exploiting the global economy.
Right.
Secondly, maintaining macroeconomic balance, generating high levels of saving and investment, allowing markets to allocate resources, and the 5th, perhaps the most important, having a committed and capable government committed to growth as its priority.
Let's talk about those 5 elements in broader detail. The first one, exploiting the global economy. What has South Africa not done in terms of exploiting the capabilities? We know that exports dropped by over 20% in the last year, a slight recovery in the first quarter of this year, but we've got a volatile rand and people are really concerned that we're not producing as much in terms of manufacturing and mining.
Indeed, we need to look perhaps a little bit further back in time, not just to the most recent turbulence. There were an interesting data put together by President Thabo and Mbekis's team for the 15-year review, and that showed that from 1960 to 2004, that 25-year period, exports in Malaysia, for example, grew by more than 4,000%. Exports in South Africa grew by 34%, which is a vast difference. And why we can't break in to a greater extent into export markets is a complicated question. One is that we're not sufficiently competitive.
All right, now let's talk about issues around public debt management. We know that in terms of disposable income, the average South African is indebted over 70%. But also there's this whole issue of government savings and as a percentage of capital formulation to GDP. Where does government stand? Because it had a target of about 25% and seemingly it's not reaching that target of its own savings.
Well, there was a long period in which the government did very well on the second of the factors, which is maintaining macroeconomic stability. When the ANC came to power in 1994, the budget deficit was heading towards 10% of GDP, which is a worrying figure. Through the GEAR strategy, and the only part of it that was really implemented was bringing down the budget deficit, bringing down the interest payments, freeing money for other things, and bringing down the overall ratio of public debt to GDP. And now, even after the global financial crisis and the recession last year, our ratio of public debt to GDP is less than 30%, which is extremely good compared to Spain, Italy, Ireland, any number of Western European nations. We, at the same time, have a very low level of household savings. And you need, ideally, a ratio of gross savings to GDP of 25% to pay for the investment that you need to expand the economy. But we last saw that ratio of savings to GDP in 1985, and since then it's been downhill pretty much all the way.
Kwebi, let's just bring in your views here. 2 issues that are coming up. The savings issue that we're not doing particularly well on, and then the public debt management situation. Pravin Gordhan in his budget for 2010 expected the deficit to be around 7.3% this year and then gradually decreasing to about 4% over the next 3 years. But this is a government that has social imperatives for healthcare, for welfare, for education, and you know, in the medium term, it doesn't look like we're going to be seeing the government curbing its spending because there's so much need.
Yeah, you know, I mean, I back up what Anthea said just now in the fact that we've had fiscal prudence, and fiscal prudence really saved the day in this country. But you need, beyond this point, you need other systems that take the country to its next level. One of those are the social objectives. You know, this country are not, it's not even running at half capacity. It's not even running at the capacity that it should be running in order to compete on the BRICS space, in order for it to compete as an emerging market. Our client base is changing in the globe. Europe is not going to be our largest trading partner anymore. It's probably going to be other emerging markets.
Right.
They work from a far bigger productivity base than what we do. If we rock up in Europe and our goods are 3 or 4 weeks late because of some strike somewhere, it doesn't matter because they're also unproductive. But if you rock up in somewhere in a BRIC country with, with your goods 3 or 4 weeks late, they'll find they'll go find somewhere else to, potentially get their goods. The leverage in an economy such as this, if it's put to good use and it's within constraints, so you not just have a runaway, debt. You could potentially fill that by deleveraging yourself, by first leveraging yourselves up, and then by growing your GDP and potentially deleveraging yourself over time. So it can be used as a good catalyst, because let's face it, this government can underspend and overspend itself completely every single year because of the social impediments.
Anthea, obviously the rand has been quite volatile in recent months, and that's led to a lot of debate about intervention from the central bank and pegging it and introducing a growth mandate and all sorts of things going on in terms of really trying to stimulate local investment. And yet the strength of the rand has been very positive in terms of conveying a confident sentiment for foreign investors and those bringing in portfolio flows. So it's a bit of a catch-22. If we're trying to grow this economy, should we be looking to FDI and portfolio inflows, or should we be looking to stimulating organic private sector investment and improving on the local investment component?
It's a big question, and I'd like to just pick up very quickly on one point made earlier. Obviously, we have huge social needs, but I think we must also remember what Pravin Gordhan said in delivering this year's budget, that the government spends a great deal of money, but it doesn't get much output, that there's a huge need to improve the value which is received from the money spent. Then if we look to how we can really grow the economy, should we be pegging the rand? I think the simple answer is that we don't have the resources to do it. We don't have the reserves of foreign capital that would enable us in any way to play the sort of role that China has. So we can't do that. We must therefore look to attract particularly foreign direct investment. That goes back to one of the 5 factors for growth. To fully exploit the global economy, you must both export and bring in foreign direct investment. And for that, you must create an attractive climate. And if we think just of the minerals sector, we have the best minerals in the world, but we've been losing out on mining investment because of concerns, most recently about nationalisation, but over a number of years because of the uncertainties introduced by mining law.
Right. Kwebi, just in terms of South Africa needing to articulate a vision for itself, what does it need to do, considering these 5 elements that Anthea has raised?
Well, I think from a political, like I said previously, I think South Africa can outspend itself every year because of these social impediments. And I think that firstly, from a political perspective, there needs to be an agenda. There needs to be an agenda, and there needs to be a hierarchy of the needs in the country. And potentially, once you understand what that hierarchy of needs are, you need to sit down and you need to create a vision around it. And so, like I said, South Africa, look at the excitement around the Soccer World Cup. Look at what we've been able to achieve around the Soccer World Cup, and just look at South Africa as a nation around the vision for the Soccer World Cup. Yes, I understand it's rugby, and I understand, soccer, shall I rather say, and I know that rugby and soccer and those things can create far more, leverage than potentially housing or education and so on. But South Africa, if you rally behind them, you could potentially create it.